Hey guys, how's everybody doing? Beautiful, beautiful morning here in Austin, Texas. A little bit crisp, nice. We've kind of had a cool April and May, which of course means a hotter than hell summer, but it's whatever. This is South Texas, after all, or Central Texas. All right, guys, appreciate y'all being here. Let's take a look at the market. I stayed up late last night working on all the stuff that was jacked up in this report. Remember, for the past couple of weeks, I haven't had an Altiverse and I haven't had anything. And anyway, I stayed up and I fixed all that stuff. So the only thing that's still not fixed yet is I still haven't adjusted my model allocation. But I'm going to do that as soon as I get done with this. That's the last thing I had to do to be caught up. And then I can be behind again. All right. Well, the market, these are 30. This is a 30-minute chart of the S&P 500 future. So this trades 23 hours a day, 5 days a week. Market got a little bit ahead of itself last week. This orange area is a Liberation Day gap from back here. This is from that stupid chart that came out. As soon as that chart came out, it crashed the market. Well, anyway, the market's evidently forgiven the administration for that stupid chart, because as long as price is over here, it means, hey, that's in the back door, so to me that means the whole tariff deal. That was the main problem with the tariffs, was the unreasonable tariffs. Well, that was the day the unreasonable tariffs happened. You could see what it did to the market. They've since been rolled back, so that's a level I'm keen on a bunch, at 56.27. However, if we do get a pullback into here, there's an area where we might expect buyers right around there, 55.95. And even some areas lower where we might expect buyers. I wouldn't even be surprised to pull back and check the most recent. It happens all the time. They check the most recent high volume node before they go higher. In fact, they did it back here on this day. They overshot a little bit, but those would be two places to buy the dip: 5,600 and then again at 5,500. So anyway, we'll see what happens. And also, we're in a place right now that was that I expected bulls to be there. No, anyway, all right. That's not really that strong. Let's take that off. All right. So basically, look, if you just look at it, look at this high volume node we're filling out here at 56.64. So that's fine. If we pull back, 5,600 to be a buy, even 5,500. Well, let's look at the SPY. Unless something changes with the current way the market's going. All right. On the SPY, I have the battle of the dueling bear wedges, but let's take off this bottom one. Anyway, obviously we really want to see the SPY hold this wedge. If it loses, this is not the end of the world. The SPY theory, where you might want to buy the dip, would be 560, 558, something like that. Would be the first place. The SPY actually had a little gap down this morning. Between Friday and this morning, there's a gap down. That area is already a red area. That's already an area where we expect sellers in the SPY. So that makes total sense. It was actually a bullish gap. How that area happened, it was a bullish gap. That was a fake. It was a trap. It wasn't really bulls there. It was actually bears there. And sure enough, the first time it was actually bears there. So I returned it orange. The next time price got into there, sure enough, bears were still there. Boy, that would have been a great sell when it rallied up there to 566 the day before the freaking, oh my gosh. Within a few days later, we're sitting at 490 freaking one. Oh my God, that's the kind of trade dreams are made out of. Anyway, we're on the backside of that now. So, all right. So there's SPY. Here's QQQ. Buy the dip, sell the rip. That would have been a great rip to sell. Now, here's the same thing, but in the Qs. The Qs left behind the same bearish area, and every time price got back there, the bears had been there until recently. So now the bulls have tried to turn this one into bullish area, but now on the Qs, where the next area we might expect sellers is right where we turned around this morning, 490, 500, something like that. So that's going to be the next spot to get by for the Qs. I think we turn around and go lower here. It looks like, I don't know, we'll see here, at least in the short term, at least for a couple of days. All right, well, let's see what else. Let's look at some Bitcoin, maybe. Where is little Bitcoin? I got it scrunched here so I can. Bitcoin's down 0.5 point. Everything that matters is right here. SPY, NASDAQ down a little bit. Bitcoin down 0.5 point. Russell down a little bit. VIX up 4%, but that's nothing. Bonds, whatever. All right. Let's look at some other stuff. Let me show you the stuff I fixed last night. I'm so proud of this. Well, first, let's go to the model portfolio, which is still unfixed, and it's fine. It just doesn't have the new allocation in it. I decided on Friday, in case you guys weren't here, that I'm taking the short allocation from 13% to 15%. So I'm going to add a little bit to the shorts because we're up so high now. I wouldn't be surprised if we pull back. At least it took back half of this recent gain. And if we at that point, then I would probably reallocate again and switch back into longs. But anyway, so by the end of the day, it'll be 15% short. And then I'm adding some kind of Bitcoin exposure somehow. I'm probably going to sell a little GPTY and a little ULTY and buy a little LFGY and kind of and start rocking that again. So I'll let you know. We'll tomorrow. This should all be new, but to see how this works, look, right there is what I'm actually down. The model portfolio is down 2 basis points. Here's all the components. GDXY is up 27 basis points. YQQ is up 16 basis points because the market's pulling back this morning. That's helping me out. YQQ is offsetting what Alti's down, basically, almost offsetting a good portion of what ULTY is down. So that's nice to see. That's how it's designed to work. In fact, the last 4 lines are this is me. This is what I would be down if I was just passively in the SPY. It's down about 0.5%. This is what I'd be down if I was passively in a bond ETF. And then that's what I'd be down if I was in a 60-40. So I'm spanking everything today. This is the way, to me, diversification is supposed to work. The rest of the market's down 0.5%. Oh, okay, I'm just down 2 bips. I'll do that all day long. You roll that forward over the course of many years. It's the same thing freaking, it's the same thing. It's the same thing institutions do. And anyway. All right. Well, let's see what else we can look at. There's just everything on consolidated. You don't see all the components in my portfolio, but my portfolio is at the far right, and the things I'm competing against, my benchmarks, are on the left. So I'm happy with the performance lately. Of course, the market's going up, but that doesn't necessarily mean I could be happy. Wonder if I would have still been 25% short. Wonder if I wouldn't have known to get out of those 25% shorts and cut it back 10% and go down, like I did at the bottom or close to the bottom. It could have been really ugly. But yes, going to only 15% shorts from 25 and then the market rallying definitely helped out. Definitely helped out because I got longer while the market rallied. So, all right, let's see what else we had to look at. Let's see, we looked at, let's see here. Retirement Simulator, we'll just reiterate the top 10 in case you guys haven't seen it. We just ran a new top 10 max factor as of Friday. So these are the fresh, these are the best performing funds and the best technically performing funds, the strongest price action. Does not look at yield, does not look at total return, does not look at risk adjusted reward, doesn't look at anything except the price. And this is great for you NAV truthers out there that are just obsessed with erosion and stuff, because this doesn't even look at yield. It doesn't, because what people like me will tell you, well, you got to look at total return and stuff. Anyway, This doesn't do that. This is for you guys. This is for you guys that just cares about the price action of the stock. I'm not saying there's people that just care about the price action of the stock, but that's really the only thing you need to care about for some trading styles. It's just a technical, mechanical. So anyway, mechanically and technically, right now at this point in time, the 10 strongest funds this past week, yielding funds are NFLP, MSTY, MSFY. I don't know how that got on there, but anyway, GLDY, TSLP, IGLD, DIVO, InFly, SCHG, HYG, QILG, SPY-I, and JEPQ. That's just looking at the price action. Those are the strongest ones. Just only looking at the price action. All right. So, but we'll update that once a week, and then as other ones get stronger. But I'm using that to inform my reallocation decisions. And the reason I'm putting Misty, I'm looking at these 10, and I'm represented by these 10 things in my portfolio pretty well right now. But I need more crypto to match this list. I have all the other. I have gold. I have anyway. So I need crypto. So we're going to get some LFGY today. Anyway, we'll see. And hopefully Misty will stay in here. Hopefully the trend will persist for 6 months. That, if it doesn't, that's, if it whipsaws and then we go back to bear market, or that's what kills these types of systems where you just try to mechanically follow the trend. That's what kills a mechanical trend following system, is when a trend does not persist or exist or show itself. So anyway, all right. So that's retirement sim. Now let's look at all these verses. I got all the verses caught up. We're well versed again. Got all the trades in here. Somehow Alti has negative 10% cash. How do you have negative 10% cash? All right. So here is ULTY, and here was, maybe it's not Alti, but one of them's negative on cash. Alti has a slight negative on cash. All right, that's Alti's allocations. Okay, biggest allocation Planeteer. They have earnings today. That's great. Second biggest allocation MicroStrategies. ULTY has pretty good exposure to some of the stuff that we've been talking about. So I have a lot of exposure to those things that are in the list, even MicroStrategies already through ULTY, and even a little bit through GPTY. So, but I do think it's time to just balance it out with a little LFGY, just in case crypto really does go to 200,000 or 1 million or whatever. It won't go straight there, but the point is we're trying to harvest the volatility on the way there. It should be volatile. So, all right. So that's GPTY verse, or here's the GPTY verse. So here's actually what they're doing to me right now. Alti's down, 2.5. The average stock's down 2.5 too. Okay. All right. Alti's done. I'm done with Alti. Alti's dead to me today. All right. Here's the one. This one's dead to me. How do you have negative 10% cash? I mean, it sounds like something I did back when I was using drugs and my life was a mess. I had my bank account overdrawn, but I'll never think I was overdrawn 10% of my net worth. But anyway, all right. Well, those days are in my past. Everything else looks, other than the cash, that this one has GPTY has MicroStrategies in it also. So you get some pretty good MicroStrategies type exposure with the assets I already have. So I need to probably it'd be nice. It might be some good content to look at the holdings in those things and then look at all my holdings and see between everything how much MicroStrategies I have or how much crypto exposure I have between, because they're, it's in different holdings. So anyway, all right. So this is LFGY. Other than being overdrawn, that looks great. So here's the actual LFGY verse. So you can see today, holy California, what is going on with CleanSpark? Did they have earnings or something? And Mara? I'm always talking about how Mara would make a goodwill stock. Well, God forbid if anyone. Anyway, it might make a goodwill stock now that it's down 10%. But anyway, it has the option volume and liquidity, and it has a relatively cheap price, and it's getting cheaper all the time to make it a a wheel stock for a beginner trader that, it's kind of expensive to wheel $500 stocks. Lots of beginners. If you have a $20,000, $30,000 account, you're not going to be able to do that. Stocks like Mara and Spotify, well, not Spotify, but Mara and I don't know, but ones that are, 20, 30, 40, $50 more interesting to will. All right. Or just because of the lower capital, lower initial capital. Anyway, look at this. Tesla is the only one that's up. I think it's good for Elon that he's out of the government business. It's good for Tesla and good for him too. So hopefully Tesla shareholders will be happy with him getting out of government. All right, GPTY verse. Okay, so yeah, this one's negative on cash too. This one's negative. They're all negative on cash. We need to talk with Jay. Jay's got all three of these freaking things overdrawn. I don't know who's running the show over there. That's what I want to know. Who's minding the ship? Who's minding the store? Right, it's minding the store. There's an expression with ship, steering the ship. Anyway. All right. Well, GPTY looks the best out of all of them because it's actually up 62 basis points. Now let's look at Chippy. I guess I could get Chippy on my reallocation. I just don't know. You got to have chips for AI. I need to figure that out on my own time. All right. So here's the actual Chippy verse, and freaking ON is freaking killing us. I was running a wheel scanner today, and ON showed up again on the wheel scanner. I always think that's the shoe company, but that's ON, I think. It's shoes, and ON is computers. All right. Well, not a very, not a great day so far in those specialty ones. Let's go over here to the. Let's go over here to the index buffer report. Let's get me a drink. The only thing that's up is my little badass fund YQQQ. I can't believe no one else has YQQQ. No one else talks about it. I got to take it back. Oracle, when he first came out, he was talking about the Tesla sandwich. He was running a strategy where he owned Tesla and Crash. So, it's not like no one's ever thought about people, And I think when they first come out, people were thinking about doing them half and half, thinking you couldn't lose money. And that's kind of what I was thinking too. But I ran a test on it and you could still lose money at half and half. You can lose plenty of money at half and half. And you can lose plenty of money at half and half. So anyway, 80-20, 85-15, 90-10, something like that. Just the sweet spot for my risk tolerances. But anyway, all right, let's but if we got in another bad situation, I wouldn't be afraid to put this back up to 25 or 30% or even higher. I could go 50% in this if I wanted to. If the market got really bad, in the worst case scenario, like in 2008, I'd do 50-50. But then when it turns around, you got to get out of the 50-50 because the short will kill your return on the way up. That's why you can't just do half of them and expect to make money. Do half of each because markets generally drift up. So when you're doing half of each, your short half, it gets killed by that general drift up. And your other half does benefits from it, but it negates it. So it's kind of the same reason I don't like iron condors. Take a damn side. You pick a direction. And I'll give you a hint. Pick up. It goes that way most of the time. And if the market's going down, just do like I did last month and don't trade. Just roll your puts and don't trade. I wasn't sure about the market. I didn't want to lose a lot of money. And I had puts. There's no reason to risk it. Just roll them down. That's my strategy. Wait for the market to stabilize and get back in on the upside. So anyway, all right. That's the index buffer report. Look at this. My two favorite funds, YQQQ and GPTY. Those out of all the ones I have, those are my favorite. Especially GPTY. GPTY is a freaking beast. Do you see the underlines it has in it? I love blue chip tech stocks. It doesn't get much. Anyway. Let's see, on the bad list, we have feed and 5e, and that doesn't surprise us, and it's nothing wrong that they do. They're ultra concentrated. They just have 5 funds. Most of these other ones have 15 or 20 that are made up of, or 100. So feed and 5e on a down day are generally going to be down more, and on an up day will generally be up more because of the concentration. They kind of just have exaggerated moves. We got SVOL over here, freaking SVOL. I mean, what are you going to do with SVOL? SVOL shorts volatility, and they do other stuff too, and they've changed their strategy lately. But anyway, volatility's up a little bit today, and they're down. Boy, I'm glad I didn't get LFGY today. What's killing LFGY today? It's that Mara, isn't it? Freaking Mara. Gosh, freaking darn it. Well, let's look at some earnings stocks here in a second. Maybe Mara had earnings this morning. Anyway, here's the Yield Max Buffer report. Let's pick out the best one. The best looking one is Airbnb. Abney, nice job. Worst looking one would definitely be OARC because it's down when its parent asset is up. That's not usually the way it works. All right, guys, I have all kinds of other stuff to talk about, but I'm going to check in with you guys now. We can go look at options and all kinds of stuff, but yeah, we can look at this too. Anyway, all right. And I have some questions to answer for Ethan, and I bet Ethan's in here. You there, Ethan? Never sell ULTY. Hey, SB Trader. Yeah, well, Grateful Trader's he's the ULTY evangelist. He likes ULTY. ULTY is a cool fund too. You just got to protect the damn downside. I mean, because it has all those high flying. I mean, I think maybe 80% ULTY and 20% freaking YQQQ. Maybe 80% ULTY and 20% chaos or something. That's probably an allocation you could set and forget. I mean, but ULTY by itself is super, super volatile, especially on the downside. You guys know that. All right, Mark. Hey, good morning. Thanks for being here. And we got Michael from the Philippines, and it's a late night over there. I usually talk to him. Usually I do late night shows, and Michael's always there. I was going to do a late night show last night, but I decided not to. I was so proud of myself for getting all the verses done and stuff. So yeah, but I'm with you. I'm never selling ULTY, but I can guarantee you I'm never going to hedge it, and I'm never going to adjust the amounts in it. The thing with free commissions, you can trade like a hedge fund. You can micromanage. You just, so yes, I'm going to manage that position, but yeah, I like ULTY. ULTY, I'm looking that fills a bucket for the highest risk. ULTY is what I would do. I've always thought when I retire, I'm going to pull some money out of my retirement fund or get some for my family and get a couple $1 million and start selling covered calls in everything. But make a portfolio. This is what I thought 20 years ago. Pick a blue chip portfolio of covered calls, sell them every month. Do the same thing that these funds are doing. I've had this idea forever, but I always was going to have to do it myself because these funds didn't exist. And it's not like I made up this idea. Other people have done this for years. I've seen people do this. So I just wanted to do what I'd seen other wealthy guys do, when I was older and hopefully are wealthy. But, you don't even have to do that nowadays. ULTY is exactly what I was picturing it, or GPTY is what I was picturing in my head. A portfolio like a GPTY. Pay and make 20 or 30% a year, pay yourself monthly payments. I mean, what a freaking, great life. But the problem is the commissions going free and all this stuff that made it great for investors. It's made it great for every investor. I was just thinking about myself and just because I knew how to trade options. So I want to, but nowadays they've brought it to the masses. Anyone can do it, but yeah, GPTY is pretty much what I always imagined in my head that I wanted to do in retirement. I wanted to break off a sum of money, a decent amount of money and do that and make it. But anyway, that's exactly what they're doing. So anyway, all right. I do wish these guys, I would love one of these things like GPTY or ULTY to come out with a built-in tail hedge. where they just have it's ULTY, but they have a permanent tail hedge. This ULTY would have done great in August with the tail hedge. I mean, in April, well, and in August. So just a built-in tail hedge. But for now, we have to hedge it ourselves. You can get it, and it's awesome, and you get great premiums and stuff, but you also get super high volatility. Anyway, as long as you're fine with that, it's fine. All right, so let's see. What else should we talk about here? Let's look at some option trades. Oh, yeah, Grateful Trader wants me to check out stuff. Let's do this for Grateful Trader. I've been filibustering enough. I know that's a lot of them, but let's check out Gut Free Income. Yeah, okay. Let's check out Gut. I do want to check out this one because I've heard of this one, but I forgot what it was. And then let's maybe do a Planetary earnings trade or something. Let's see how liquid those darn options are. What's up, Jackson? Well, I had a good dinner last night. Wagyu beef every Sunday night. We have a guys' night on Sunday night. My three buddies, and we freaking go to town. All right. Okay, Gut. Let's see. Here's Gut. Oh no, that's not Gut. That's GPTY. Gabelli Utility Trust. That sounds pretty freaking boring to me. Come on, Ethan. What are you doing to me? A utility trust? Oh my God, you got to be kidding me. You got to always bring me stuff that involves tail risk or options or something sexy. This is not sexy. This is not sexy at all. Look at this. They don't even pay. Or they did. Oh, I take it back. It pays an 11% dividend. I start getting excited when I see more than a 10% dividend. No, seriously, utilities, what a great, of course, utilities forever. Since I've been selling stocks to old ladies, and since before me, since the beginning of time, stockbrokers have sold stocks to old ladies. Ladies live longer than men. There's a lot of rich ladies in the world. There's a lot of rich old ladies that, that they kill their husband off by 45. He has a heart attack, making money and putting up with them. And then they're sitting on freaking, a bunch of mineral rights in West Texas. And they, they live to be 90 years old. Happens all the time. Those kind of people that have money, but aren't really that interested in risking it. Utilities. Utility stock, they call them widows and orphan stocks. I mean, utilities, people always need electricity. I mean, and utilities have a downside buffer. Why do they have a downside buffer? Because utilities generally pay a big yield. Like this one pays 11%. The average utility pays more than the average growth stock. The average utility may pay a 5% yield. The average growth stock pays a 0.5% yield, let's say. Okay, well, the 5% yield, what does that do for you? It gives you downside protection. That's your buffer. So that's why else it's a widows and orphan stock. They're safe stocks. Anyway, this is just a trust of safe stocks, so nothing wrong with that. That was actually a good call, Ethan. I was just giving you a hard time. All right. Now, I saw you mention CELH. I've looked at that one before. What is that? Celsius Holdings? Yeah, I've looked at that one before. What else are you talking about? A few MCs, MXR, Ride or Die. Those are will ideas. Okay, yeah. I need to put those on the will list. All right, MJ, you're still a big fan of PLTY for high yield, or nothing wrong with that? I mean, nothing wrong with any of them. I generally stay away from the single stock ones, but I mean, that's just me. That's because I'm a weenie. I also don't go on, I don't know. I'm scared of heights too, or whatever. There's a lot of stuff I don't do that you guys might think is fun or something. I don't know. Yeah. So don't listen to me, but yeah. PLTY. I mean, what about ABNY? Does anyone have ABNY yet? Just from looking at it, it hasn't been around a year yet, so it's not in my metrics, but just by looking at it, it looks like it's going to be a good one. Same thing with PLTY. It's not around a year, but you can tell it's going to be a good one. Let's look at this. Let's say we thought, let's do something. Let's look at something here. I promised somebody I'd do a Planetary earnings trade. People like to do my 3-leg risk reversals, I think. So, well, that doesn't look good. A lot of red on that freaking screen. But anyway, all the stuff that was winners expired last week. Remember last week, the whole screen was red. It just left us with the whole screen was green, but now we're left with the losers. Anyway, maybe this will still come true. Remember IBIT going to 55 or something? I thought that was going to happen. I guess it's pulled back a little bit. Oh, no, this was a continuation. It already went to 55, and this was our continuation. This was the rollout trade. So, and it just basically, anyway. The initial trade on that one worked out. All right, well, let's just do this. Let's build a, I love liquidity. Let's look at PLTR. They have earnings. I don't have to do a bullish trade. If you guys are bearish, we could do a bearish one in here too. I mean, it doesn't matter. Oh yeah, that's liquidity for you. Jeez. $700 risk, Hunter. Oh yeah, this is just math wise. Math wise, you can do some damage with this. The bid ask is so tight. I love me a tight little bid ask. I love me a tight little bid ask spread. There's nothing that gets me going as much as a tight little bid ask spread. $200 risk on about $1,800. $200 yield on about $1,800. The $200 creates a downside buffer, a pretty good one. Look at that, 11% buffer. This is the biggest buffer I think I've seen. This just has so much liquidity and is so volatile. Yeah, I've never seen an 11% buffer. It doesn't mean it doesn't mean the trade has to win, but most of my buffers are 5 to 6 to 7. Now here's the deal though. It's Monday. This doesn't expire till Friday. Most times I do earning stocks on things that are Wednesday or Thursday and expire Friday. So they don't have as much time value built in. So I really don't really care for any trades on Monday, but anyway, but just mathematically, if you're a bull on Planeteer, oh shit, that's the wrong, or I'm sorry, shoot. Sorry. I try not to cuss this year. I promise someone not to, and I've been watching the swear words a lot better. So, all right, let's look here. I mean, yeah, what's not to like about this? $228 on $1,700 risk, 11% buffer. If it does go, if you do have an outlier move up, you gotta, you can possibly cash in a little bit on that. If you have an outlier move down, that sucks. That really sucks. I'm sorry for you. But I'm going to show you what could have happened to you. Takes me just a second to set this demonstration up. All right, so now we have the tale of two investors. All right, my idea is this white line right here. And the old way to do it, just buying shares, and there's nothing wrong with buying shares. You can see buying shares does better on an outlier move up. But here's the catch, though. You don't hold it till expiration. We hold it till about halfway or something, and you still do all right on a move up. But yeah, you don't make as much as you would on because you're giving up a little bit of your upside. That's the problem. But you still do have a possibility for extra upside. You don't get as much upside as before. But your payoff is right here. Look if you go down, you only hit the white line. Look how much better it is on the downside. Wonder if some earnings stocks miss and they're down 25% or something. It can happen. If it goes up, you still make money, just not quite as much as stock. But the real thing I like about this is the $200 yield and the 11% buffer. If it goes nowhere, also, that's the other thing. Keep the $200, or even if it goes down 10%, keep the $200. It makes a big difference. All right. So that's Planeteer. Let me save that, and that is actually a bullish earnings trade. I'm going to put that in there in case anyone wants to do that. So, I just saved the stock strategy, the comparison strategy. Save trade. All right. Bullish earnings. Copy link, and then you guys can have it right there. All right. All right, let's see what else is going on. BKCH, HIMS. Oh, yeah, HIMS. Okay, let's look at HIMS real quick. I'll promise somebody else. Okay, we'll just do this really quick. HIMS could be a great. I assume you're bullish. Got to pick a direction. We don't do. Actually, I do non-directional trades. If I could do a non-directional trade, we'd do a broken wing butterfly or something. I just don't care for iron condors. Okay, so look at all this freaking volatility. I mean, all this liquidity. You know, you see how I can tell that when you move it is how much green you have compared to red. When you have an illiquid stock that has a big bid-ask spread, your green will be this big and your red will be this big. I'm talking visually. This you can also look at it number-wise, but just if you're visual, I can just see as soon as I start doing this, yeah, this is liquid. And I'm looking to make about, just like Tasty Trade, a third or sometimes a fourth of the distance between the two wings. So this is $62 on 256. That's about a fourth. The fourth works. Then we're going to add a call. We have put the call out here at the way out here at the first standard deviation up. Then I usually do 2 put spreads and 1 call. The 2 put spreads generally pay for the, or sometimes they don't, but if they don't, you don't have to do it. There's a $40 risk on $695. $60 on 600. That's the 10% cutoff. 12% break even. I mean, yeah, you could do worse trades than this one. I mean, it's, I don't know. Anyway, it's up to you guys, though. Figure out if it's going up, this will be a good trade. If it's not, this may not be. So, anyway. All right, I'll send that to you guys. Copy link. Okay, so everyone wants to do that. All right, BKSA or BKCH. I've heard of that one before, Ethan. BKCH. I know that one. I'm just trying to think what it does. BKCH. Some kind of something. BKCH. Oh, we'll just look at it. I've looked at it before. BKCH. So it's Global X. Oh, a blockchain. Okay. All right. Well, does it pay a yield? Yeah, 10%. That's where I start to get interested, is above 10. So that's cool. Whatever. 10% yield. Let's look back at it. Has had decent growth. I mean, it at least kind of slopes up and to the right. Look at the 10 biggest holdings: Coinbase, Mara, Core Scientific, Riot, Hut 8, Clean Spark. What the hell is happening? What the heck is happening to Clean Spark? Look at that, down 8%. My Lord. Applied Digital, down 3%. IREN, I don't think I've ever heard of this one. Data processing services from Australia, $1.39 billion company. I will say this one doesn't have MicroStrategies in it. So this would be a good fund if you didn't like Michael Saylor, but you wanted exposure to this, to this industry, or, it'd be something to look at. Anyway, that's a good that's a good one. That's a good one, Ethan. So it's a decent one. All right. What else? I'm trying to get caught up. So let's see what Mark's doing. Check out Gutfirm. Okay. We checked out those. If you don't mind, Ethan, put those, if you think about it, put those in the wheel room just so we don't forget about those. I want to look at those other ones later. Or maybe I'll do a special video for the wheel. So Mark just bought 500 Misty this morning. So he's thinking the same thing, have an order for another 500. Yeah. I'm just thinking I want exposure to Misty, but then I just saw that it's the biggest position in Alting and GPTY. So I have exposure to it. But I mean, nothing wrong with having a little bit more exposure. I don't have exposure to some of the other stuff in LFGY, like Clean Spark. Not sure I want exposure to Clean Spark, but I may after today because, well, anyway, you guys know how it is. But I like the program they run over at YieldMax. And so other things being equal, I'll generally probably choose the YieldMax product, but not always. Not always. Or the J product, the title product. Trying to think if I have any products that aren't title. I have TLTW, not really because I like the fund, just because I want exposure to that sector. So anyway, all right. I'm glad you're here, Mark. Thanks for being here. HIMS, BKCH. I'm getting caught up. Okay, wonder mathematically. What if mathematically you did a strangle on Planeteer? Okay, well, let's just do this. So hedge funds and big traders and guys a lot more sophisticated than me use naked strategies all the time, and they'll just sell a straddle in front of earnings, just sell a put and a call. So I just don't have that much. I just don't have that much courage. But anyway, let's look at the straddle. So mathematically, I mean, because the vol is so jacked that the wings are way wider than it should be, there's no doubt mathematically this is a decent bet. You know, it's just, I just see this and I'm thinking, man, what if it drops 25% and I put this on, you know? And I guess that's not the worst there, because you get a $1,700 credit, and if it dropped 25%, you lose $1,300. I mean, the credit's so gigantic that it, you know, I just don't like open-ended risk. If I was going to do this, I would, if I wanted something like that, I would just do a, well, something like this, iron butterfly, but you could split the strikes out further. If I wanted some, you know, something like that, I might do that. But where I had, you know, $180 risk on both sides, and I can make twice as much as that if it doesn't move. That's a decent trade. I may do that trade in real life. I don't know. I'm just saying that's a decent trade if you thought Planeteer would move. I would hate to bet against Planeteer not to move on earnings, but this is a two-sided bet. You're betting on it not to move, true, but you're also playing the vol to collapse that you know. So you don't want it to move too much, let's just say, or any more. It can move, but it can't move more than the vol collapses. But anyway, this is a neutral earnings trades. We never do that. That's not the worst looking trade, and it's because it's all that liquidity. Liquidity is the answer for everything. I mean, like I say, liquidity gets me going. That's what gets me going. Liquidity gets me out of bed in the morning. You guys want this one? I mean, that's not the worst looking trade. But yeah, that's the way I would do it. But that's an amateur move. Hedge funds don't buy the wings. The wings end up costing you money over time, probably. They have plenty of money. They aren't worried about, you know. So it's a different strategy. But if I wanted something non-directional, I would just cap my risk on both sides. $180 risk on both sides, even if that's not enough, and it isn't. But do it 10 times. You have $2,000 risk on both sides. If it doesn't go anywhere, you make $3,000 in the middle. You have about $300 reward in the middle. So call it $3,000 if you did it 10 times. $2,000 risk on, or $1,800 risk on the wings. It's not bad. All right, Mark, what are you up to? You dumped all your weeklies a couple of weeks ago in favor of just the two highest yielders plus GDXY, CRS8. I couldn't even tell you my weeklies are. I just have everything on drip. It doesn't even, but anyway, that's just, so crash and fiat to buffer the volatility. Yeah. The thing is not only to crash and fiat buffer the volatility. If they were just inverse funds, that would be one thing. You could put them on, but it would cost you return. You would know that. You say, I'm going to put, like you could invest in SQQQ. You can put 10% S triple Q into your portfolio and you have smoother results, but it's going to cost you return. The thing is, SQQQ doesn't pay a yield. These freaking things pay a yield. You put it in crash and fiat and Y triple Q, you have some inverse exposure. And so you get some buffering, some downside protection, not total downside protection, but you get some degree of downside protection with a cap on it. But you get the yield. You're double dipping on the yield. Anyway, hey, Michael, thanks for being here. If you have to go, I appreciate it. This has gone on pretty long, but thank you for being here. Okay, what am I doing on every swear word? I have to buy a share of ULTY after 5. That would be a good one. That would be a good one. All right. I mainly say frickin' and darn. I just substitute frickin'. I say this is so frickin' stupid and this is so gosh darn stupid and stuff. I'd say a lot of words that aren't dirty words, but they, anyway. I say frickin' and gosh darn a lot. Yeah, I mean that's such that Mark just made the point. Yeah, that I just reiterated my point. Yes, they pay those things, but heck, that's awesome because it's just a product, it's a strategy that has never existed before, unless you were a hedge fund, and unless you could do doing covered calls isn't that hard, but doing a reverse covered call, I mean, shorting stock, doing a covered put is not super easy. I mean. And it really something as a retail guy. I mean, I could do it. I would just do a 3-leg. I would just do a reverse 3-leg. But anyway, there's lots of things that are. It's just amazing all the sophisticated strategies we have out there are available to us, and we just talk about options. Can you imagine I'm just trying to cover the state of the art in options. And the main thing options can do is either get a yield, and that's what the Yield Max ones do. But some option funds can be used for other stuff tactically. But mainly we're talking about getting a yield. So that's what we talk about 24/7. I really thought more people would follow my model portfolio and want the and stuff. But people don't hedge or whatever. And that's fine. You don't, like I say, you don't have to hedge. It's an individual decision. Anyway. All right. Mark, what are you saying? Both ES and Bitcoin are down today. My portfolio is even with last Friday. So, yeah, my portfolio is too, right? I mean, when we're looking, it was flat and everything else is down. So I'm happy with that. And I'm particularly happy with that because Y triple Q on top of giving me the downside protection, it's also paying me a yield. So, and it's not up as much as it was. Now it's only up 13 bips. Whereas Alti's costing me 23 bips. So now I'm down 10 between the two of them. But whatever, at least I'm not down 23 between the two of them. GDXY is saving me today. And I almost thought about selling it last week. No, I'm not really. But I mean, but I was just wondering, is gold over? Is gold done? Am I too, Let's look at GDX. The market's actually recovering since I've been talking. We were down 0.5%. Now we're only down 35 basis points. So here's GDX, not GDXY, but I mean, it's just a really short-term chart. That the story on this thing is if you look at it here. I probably just should have added some last week when I was thinking about dumping it. Always do the opposite of what you're thinking about. That's a good plan. All right. So what's within $100? Let's see. Exact crush. Yeah, we'll look at UNG. Both ES and Bitcoin are down. Oh yeah, but you're within $100. Yeah. All right. So does UNG actually showed up? I believe UNG showed up on my wheel scanner. Is it right? No. Where is this? Is this it? Or just the one that's dead? No, that's the one that's dead. All right. Wonder how my DraftKings is doing. I had some content yesterday on DraftKings. They probably have earnings this week. That's why their volatility was so high. I like the stock DraftKings. If I was looking for a will stock out of all the ones I was talking about yesterday, DraftKings would be my pick. Just based on what the company does. I like that sector of the economy, the gamification of everything. That's what they've done to options, kind of. I mean, and it's what they've done to sports, and it's gamified everything. And I love it because I've always loved games and strategy and stuff. So, great time to be a trader. Anyway, okay, UNG. What do you want to do on UNG? A 3-leg, or let's see if we can. I did, but like I said, UNG showed up on a wheel scanner, meaning it has crazy high vol lately, and I was looking at it too. So I'm not a wheeler. If I was going to do a wheel, I would just do a 3-leg. It's the same thing. So 3-leg is the wheel in one step. It's both steps combined. Let me see if UNG has enough liquidity. Just not looking like it has as much as those other ones, but those other ones were liquidity monsters. Well, I mean, that's not the worst. That spread may work. It doesn't have a huge built-in advantage. Some of these ones, the reason I started calling it loaded dice is because some of these you can just are almost unfair. You can move the freaking you can move the break even down 11%. That just seems unfair almost. So that's the loaded dice fits that. I don't know. The loaded dice fits this. It has a 2.8% buffer, makes $16 on $133 risk. This one, let's do it this way though. Hey, $47. Let's try this. Yeah, this is just not. I mean, if you wanted to, 47. There you have it. 20. There you have it. I mean, that's a trade. That's a bullish trade. Oh, and that goes out 2 weeks. Hang on. We only need 2 weeks, right? We just need 1 week, right? Oh no, 7th and 9th. It expires on the 7th and the 9th. So it expires again on Monday. They have weird expiration. Or wait, 5th. No, it expires Wednesday and Friday. Okay, gosh darn. Commodities for you. They have different expiration schedules. That's why I was having problems with the liquidity and stuff. It had another expiration 2 days behind it. It's important to know your product. I've never traded natural gas before, but every product has different things. So anyway, we'll leave that like it is. We'll leave that for Friday. That's a way to play a bullish move for this week. I'll put that in there. Well, I just screwed it up. I just messed it up. All right, that's fine. Copy link. And there you have it. And I'm going to drop that off in the chat. Hey, Sean. Yes, CellH. I'm sorry. I got sidetracked. That's Cellular or Celsius Holdings, I believe. Let's take a look at it. Oh, it does. And maybe it has earnings. You guys probably want an earnings trade, don't you? Celsius Holdings. This is the kind of one that can make a decent earning. I mean, this is the kind of stock that I like to do them on for sure. Cheap, $34. I wonder if this one's a will. This one's a will candidate. That's right. We were looking at this one for will candidates. But I wonder if also lots of times when you run a scanner for will candidates, it also shows you stocks that have earnings this week. Because when you have earnings this week, it drives the volatility up and it makes those people hit the will scanners. Now on this one, let's switch to a daily chart here. This one's in ULTY, right? Or is it in? It's in some stuff that Jay has, I think, or is it in LFGY? They do have. Look, they had their last earnings was about a month. It was about 3 months ago in November. I mean, oh no, then it was actually their last earnings was right there. So maybe they don't have earnings. They do have something right here. What does that say? Oh yeah, they did have earnings today. Or may say they have earnings tomorrow. Estimates 19 cents. All right. So earnings tomorrow, you guys probably want a 3-leg in that. That would be a good one to do a 3-leg on. So let's do that real quick. Spread. All right. Price-wise, this has will written all over it because you could, even if you get the stock, it's $3,000. I don't know anything about the stock, though. I don't know if this is a stock you want to get stuck with. I mean, I don't even know what it does. I don't know if it has positive earnings, negative. I know nothing about it. So, all right. So let's do this. I got an idea here. Let's see. We're going to add a buy call. All right, let's see if this works. Another 11% break even twice in one day. But it's because the earnings are earlier in the week. That's all it is. Like I say, Wednesday or Thursday, I get 5 or 6 by that time. So $27 reward on $400 is not enough. I need 10% to get me excited or more. There you go, $73 on 526. There's nothing, mathematically, there's nothing wrong with that. You need the, let's see, earnings idea. All right. Copy link. I'll drop that off. And now you guys have these trades hedged. You guys don't hedge. I always give out my hedge trade. You guys don't hedge. But in case somebody's watching that's shy, and there's probably people that watch and don't talk, but let's get this. I showed you one on Friday. Hopefully those people got it done on Friday, but it protected you for a week. It just cost $200. You could have put on all 3 of those trades that you could have put on Celsius, whatever, UNG, Celsius, and whatever. But that $200 trade would have given you some amount of protection. If the market would have done what it did in April, you would have made $2,000 off that $200. All right. Did I send this one to you guys yet? Did I give this to you guys? Save me a steak. No, I didn't save you a steak. I did not save you a steak. I did not. I didn't even. Usually, what I do is sometimes I'll save half of my steak and eat it Monday for lunch or whatever. But anyway, it was so good. I ate it all last night. All right. Let's see here. What else did I want to talk about? Oh, yes. Just in case someone's watching, do this freaking protect yourself. You wouldn't go on a date without taking protection, right? I mean, or you wouldn't do lots of stuff. You wouldn't leave the house without locking the door, right? All right. So let's see how the trade I showed you is doing. I mean, it's probably up a little bit because the market pulled back. Maybe not, though. Protection for 2 weeks. I did one for 2 weeks and one for 1 week. Protection for next week. It's costing you $38 right now. I'm going to freshen this up. I'm going to freshen this up for you guys, though, and plus to show you how I do it. This is a diagonal, a ratio diagonal, which is a freaking hedger's best friend. Let's look at that because I do this based on the chart, though. Let's look at SPY. Let's look at SPY, and then let's look at well, we can do it on this one. SPY's right here. If we go to 553, that's a buy. Even if we go to 535, that's a buy. That right there. I'm not trying to hedge that out. If we fall past those trading ranges and get down to this lower trading range at 515, that would be a bust. That would mess up all of the trades, especially if we did that this week. That's what I'm trying to hedge against, is that if it goes down there or goes to here and then back up, I'm just going to buy the dip. I'm not trying to hedge against that. So that's how I choose the target. So the target is 512. So let's get over here, and there's no ratio diagonal presets. You have to do this yourself, but all right, SPY. We'll just use SPY. Maybe you go out till next Monday. Take it out a day further than the last one, just to make a difference. So this goes out. This protects you for a week. Now 512 is the 512. That's what we're protecting against. So we're going to go down there. We're going to sell that option it's only 16 cents. Maybe we'll sell the 520. Anyway, it's 20 cents. Okay, we're going to sell the 520. Then we're going to buy the 515 twice. $100, $127 risk for a week. If we do get that move to 510 or 515, it's a 10-bagger. If not more, because volatility will pop. If we get a move with pop volatility to 520, you're looking at a 15-bagger or something. So, and I know it seems kind of weird selling this option for 20 cents. I'll explain why, but it makes a lot of sense. I'm just not going to explain it right now. I need to do a whole video on it because it's actually, I find it interesting. So, all right, save this trade. I'm going to send it to you guys. That protects you for a week. Costs $150. It won't totally protect you, but if something really bad happens, it'll give you. You'll probably lose a couple $1,000 on those. If you do those 3 other earnings trades, probably lose $3,000. But this $1,700 you make on $150 risk, it'd make you feel a little bit better about it. You know, it could prevent a margin call depending on how margined you are. So. Anyway, save trade, ratio diagonal is a hedger's best friend. I'm going to put it right there. All right, guys. MSTI checkout. What MSTI? Okay, well, let's check out MSTI. MSTI sounds like a stripper's name, right? I mean, or Candy, Misty, Summer. I mean, and I don't go. I'm really not a big strip club guy. I've been to like 5 in my whole life, but I mean, I know enough to know what their names are. I have different problems. You never catch me at the strip club. Some guys have problems with women. Some guys have problems with booze. Some guys have problems with both. My problem is always with booze. You find me at the bar, instead of you find me at the bar passed out instead of out chasing tail. I mean, everyone has to have a bad habit. My bad habit was more on the drinking side and less on the chasing tail side. But some guys get a little bit of both. So anyway, or a lot of both. All right, Misty. Well, I mean, I don't know about that. What is this? Madison bond, 5.24%. I mean, let's see what they have. I don't even know what that is. These are some types of fixed income stuff. Fannie Mae. It's fixed income. Nothing wrong with it. It makes 5%. If you want some fixed income, it looks like it has mortgage-backed stuff, maybe Fannie Mae, Freddie stuff. I don't know. This BOA, maybe that's a corporate bond, maybe 4.8 GE. Yeah, I mean, I'm just not interested enough to look it up, but I guess I will now. But I'm thinking maybe corporate bonds or something. Who knows? I just don't get that interest. Yeah, corporate bond. There we go. Corporate bond. I nailed that one. Non-taxable, so it's a municipal corporate. I need to tell Papa Convexity about it. Papa Convexity's never met Grandpa Convexity never met a municipal bond he didn't like. They bought all the municipal bonds they could find. Because Grandpa Convexity did not like paying taxes. All right, guys. I guess I'm going to get out of here unless there's anything else we need to talk about. Probably won't have a noon show since this one went on so long. We'll just do an end-of-day show. So, I have some feelings of, okay, I drink beer. Okay. Michael does both. He catches the exacta. He does both of them. And I'm not saying haven't done plenty of both, but my problem was more at the bar than with the ladies, but that's just whatever. I mean, you might find me with getting drunk with the girl, but I wouldn't be hitting on her. We'd be in the corner doing coke or something, but I'm not hitting on her. Anyway, all right. Too much just ain't enough. Yeah, some of us are never satisfied. Yeah. Well, Michael lives in the over in the happiness capital of the world, Philippines. Anyway, guys, I appreciate y'all for being here. Yeah, I hope to catch you guys next time too. Anything we forgot to talk about, put it in Discord and we'll do it at the end of the day. Okay. All right. See you guys later.